the market expectation is kind of no one really have a crystal ball of what's going to happen in the future, but the narrative in the market is that demand is going to grow at an exceptional pace. But I do see a couple of risks in there. The first one is really the return on those hyperscalers investment. The other risk is competition, as you pointed out. The Chinese large language model are built up on cheap power, cheap electricity, cheap land, and cheap hardware producers. Because China is, the technology could be generations behind, but once they get to a certain technology level, the cost of producing those products is just significantly cheaper as compared to the developed market.
Welcome to Merryn Talks Money, the podcast in which people who know the markets explain the markets. I am Merryn Somerset Webb, and this week I'm speaking with Fiona Yang, a fund manager at Invesco. She is the manager of the Invesco Asia Dragon Investment Trust. On today's show, we talk about AI, we talk about Korea, volatile market, very AI exposed. We talk about India, cheap or not cheap, and why has it lost so much popularity? And we talk for probably the first time on the show about the Australian stock market. Fiona, welcome to Merryn Talks Money.
Thank you for having me here again.
Right. Now, you were in earlier this year, and my goodness, a lot has happened since. And at the time, we talked about all sorts of things, but one of the big topics that we discussed last time, and by the way, listeners, if you haven't listened to the last one, maybe go listen to that one either before or after this one, because it had lots of interesting stuff in it. I wanted to start by talking about what's happened in Korea, because it was already going great guns the last time we talked. It continued to soar and soar and soar based on a couple of major AI related stocks. And then we had a little bit of a stumble. And now Korea is, well, I mean, I was going to say 25% off its peak in June, but on the day that we're talking, I think the Kospi went up 7-8% even yesterday. So this is very volatile stuff. And we're also hearing about a lot of very highly leveraged ordinary Korean investors, or gamblers, I guess we should say, who've lost an awful lot of money by being, having very high margin debt and then being hit by falling share prices. So Korea is fascinating because it's exactly as you said, that front row seat to AI, but it's also turned out to be very, very volatile.
Yeah, exactly. That's a fantastic observation that you had there on the Korean market. I think if we take a step back, quite a few things has worked out very favorably for Korea over the past 12, 18 months. The memory cycle boosted by AI demand is just phenomenal. This is one of the biggest super cycle that we have seen for stocks like Samsung Electronics and SK Hynix. And on top of that, I think we had to say the Korean government has done a fantastic job in boosting shareholder return, doing the value up initiative in Korea. It's a textbook sort of example that all the other countries should really look up to. For some of the holdings that we have in the portfolio, especially the financials, they are boosting shareholder return massively over the past few years, and they start to really focus on shareholder interest, protecting minority shareholders' interests, and giving us more voices in the boardroom. That's something that I think in all this data center or AI sort of narrative that investors have forgotten. But I do see risk. There are two risks I see in the Korean market. The first one is a concentration risk, as you correctly pointed out, with the participation of leveraged ETF. I do think some of the retail investors might thought they just bought into a product that give them a bit more return into this investing into a great company, but reality is it's a much more complex financial product they got themselves into, and that led to the capital losses. And then the other risk is really earnings risk. Now the market is having super high expectation what the memory price going to be. If you look at Samsung Electronics 2Q preliminary result, they delivered 19%, 19 times increase versus 2Q last year. But share price is actually down post that result, exactly because of this expectation versus reality. Expectation of earnings growth is super high to the degree that even fantastic earnings cycle cannot meet that expectation. That also result in share price volatility that we have seen from the peak.
Interesting. I mean, everything you say about the changes in the Korean market and the changes to shareholder democracy and the changes to regulation-driven corporate governance. I mean, that's what we saw in Japan in a previous cycle, right? And still think ongoing in Japan, which is interesting. So the Korean regulators kind of picked up all sorts of hints from Japan, and that makes a great long-term story for shareholders in the Korean market. But nonetheless, in the short term, as you say, it is all about concentration. So, SK Hynix and Samsung are a huge part of the market, and it's the same across the Asian market. Actually, if you think to yourself, I'm buying emerging Asia, or I'm buying Asia, and you buy any kind of index or ETF product, you're actually just buying huge exposure to a couple of AI stocks. So that concentration is the thing that really matters if you're buying into any kind of index product, which means that you really have to look in detail at the second risk which you bring up there, which is the super cycle in memory. And when you refer to it as a super cycle, I wonder what you mean by that and how long you think that cycle will last. Because I think for old people, old investors, people who've seen these cycles go on forever and ever, one of the first things I ever learned when I became a stockbroker in Asia was that these cycles tend to be shorter than you think.
It's best just to take a step back to look at how we ended up here. About rewind the tape like 2-3 years ago, what happened to the memory industry was actually we were in a down cycle. If you look at NAND, which is sort of non-flash, that is in deep loss making as a result, even though the industry only have a few producers of NAND, none of them was really expanding their capacity aggressively. Similar for DRAM, which is the other type of memory that goes into all these AI products these days. Same, they have gone through this commodity super up and down cycle in the prior sort of data center cloud build out era, and the profitability has deteriorated very quickly. For a company like SK Hynix, they have to really go to the market to raise convertible bonds because their balance sheet was in deep trouble. They were super leveraged, so they were not in a position to expand capex. All of this moving to where we are today is we had this period of underinvestment by the major players in the memory markets. And on the other side of demand, we suddenly have AI. We have agentic AI that just need a lot of memory to really recall the conversation that you had with ChatGPT, with Anthropic, with Claude, so they can help you to do the task better from this point on. So that demand surge is unexpected from what all these investors as well as memory producers' perspective even 12 months back. That's why we ended up with this shortage in supply because underinvestment over the past couple of years, as well as this sudden surge in demand. So what has happened is really this shortage has just driven the prices of exactly the same products up phenomenally over the past few years. Then the question is about how long this cycle could last. I think it could last for a couple of years because of this supply to come up will take time. You need to build the clean room. You need to pre-order the equipment and put the equipment in there. But then does that mean the share price could last for 2-3 years at a very high level? That might not necessarily be true because expectation is already up there. Stock market is about expectation versus reality. The expectation is already there's a sort of AI demand that cannot be met, and the supply will not come up in the next 2-3 years. If we do see any sort of vacuum in the demand side of things, or supply could come up just faster than expected because suddenly all these companies have raised huge amount of money, not just for the Korean ones, but also the Chinese competitor is doing an IPO in the coming days. All of that could change the supply dynamics quite a bit. Then it's about when does that price or the customers, by the end of the day, you have a handful of hyperscalers paying for all these products. If they do see demand weakening slightly and the supply going to come up quite massively, the bargaining chip going to go back from the memory producers to the payers, and we could see prices start to fall from this point on.
Yeah. Let's talk about demand then. I mean, the supply conversation is slightly easier in a way, isn't it? Because you can see the timeline that's required, as you say, to build the clean rooms, etc. But when you look at demand, the assumptions for rising demand are pretty enormous, pretty enormous. And there are all sorts of things that could affect that. One of those being people changing the way that they use LLMs at the moment. People changing from using the services provided by the big American hyperscalers to using Chinese products, etc. So there's lots of things that could shift inside the demand equation.
Yeah, absolutely. I think there are, I mean, there are quite a few moving parts in that demand equation. How I see I think demand is here to stay. It's just a question of how fast it's going to grow. The market expectation is kind of no one really have a crystal ball of what's going to happen in the future, but the narrative in the market is that demand is going to grow at an exceptional pace. But I do see a couple of risks in there. The first one is really the return on those hyperscalers investment. It is really, given the current sort of annual run rate of the revenue produced by OpenAI, Anthropic, and not to mention, the past uncertain path towards profitability, the ROI of this hyperscaler investment is still questionable on this huge amount of capex we're going to see or we expect to see. So that's one risk. The other risk is competition, as you pointed out. The Chinese large language model are built up on cheap power, cheap electricity, cheap land, and cheap hardware producers. Because China is, the technology could be generations behind, but once they get to a certain technology level, the cost of producing those products is just significantly cheaper as compared to the developed market. So as a result, their large language model is actually priced at a fraction of the cost of the leading edge model that we have seen in the Western world. I was just having lunch with one of my friends who operates one of his own software company in the Asia region. He talks about, yes, we just switch between the models. Certain tasks, we can just use, the 90% cheaper Chinese model, and certain tasks, the most advanced mass, maybe we use the Western model, and that's a perfect way out for us to both save on costs and really get to the desired outcome for coding and etc. So that just those two risks that I have taken into consideration, thinking about the demand and how quickly that demand going to grow from this point on.
Yeah, see, that's interesting. So a lot of the demand assumptions assume that everyone will always want to use the best model, but that's not really the case, is it? People will use the good enough model, depending on price, depending on task.
Exactly.
Yeah. Okay. So if you are now investing in this region and you're looking at this concentration and you're looking at these risks that we've just talked about, and I know that a lot of people will say to you that the big companies, the Samsungs and the Hynix, etc., that they still look reasonably cheap. But of course, that's the way cycles always work. You're supposed to sell these companies when they look cheap and buy them when they look expensive, because that's how the cycle works. So if you're an active investor, now is the time to diversify away from those pure plays, is my guess, and start looking at companies that are not so much the picks and shovels, but the companies that will benefit in other ways from using AI. If you're still going to talk about this as an AI trade, start looking at the companies that will be able to use AI to improve their productivity, their customer service, etc. So you're moving out from those pure plays.
Yeah, that's exactly, for active bottom-up fund manager, that's my job day to day. So two angles I look at this. One is really, outside of the AI stuff within Korea. If you are a Samsung employee, you get this huge bonus because you just negotiated to get 10% of the company's OP to operating profit to be paid in bonus. What are you going to do with it? You're going to buy a house.
Can we just stop on that? What do we get people getting in the way of bonuses? I mean, I've read about this, hundreds and hundreds of thousands of dollars being paid out in bonuses to ordinary employees. What's the scale here?
This is going to be massive. I mean, the sell side, the most bullish expectation is next year SK Hynix could get to about 450 trillion Korean won. If you have 10% of that paid to the employees, it's going to be huge as a percentage of the country's GDP. Of course, that's expectation. I'm not saying we will get there, but with that huge amount of money, then people will want to spend it. They want to buy a house. They want to buy handbags. And actually it's already happening. People talking about the insatiable demand for luxury handbags as well as jewelry in Korea. The department store is just packed. If you go to the VCA in the morning, you have
Yeah.
to get a queue ticket the first moment it opens. Otherwise, you will not be able to visit it for the whole day.
You have
So
to
that
queue. You have to queue to go into a
to get a
department
ticket
store.
to go to one of the jewelry shops. Yeah.
Right. Everyone should come to Edinburgh. There's no queues outside our luxury shops.
I think they're gonna do that. Absolutely.
Book your holidays here, Hynix employees. We're waiting.
Yeah, so those are the things that we expect to see. We already started to see signs of that, but once that money get into the pocket of the employees, that's exactly what they're going to do. They're going to go overseas to travel as well. So we want to benefit from that. I think the banks, it's going to see an acceleration in loan growth, the wealth management product demand for introduced by the banks. And then also on the other side is AI capex. You're going to benefit a lot of the construction company in the country. So that's around, within the Korea, the secondary and tertiary beneficiary from the AI trend. And then outside of that is the point you raised about who going to use this AI technology to really benefit structurally for the future. So some of the winners that we identify is actually the internet space. We like some of the game developers in China or in the region. If you think about, online games, how you develop in the past, you spend millions of dollars trying to produce the content to make the AGI looks absolutely amazing. That comes at the expense of hiring thousands of programmers, graphic designers. But now using AI, you can just make it so much simpler. It saves the cost and really enhance the gameplay. And you can even tailor-make the products to every individual user. Have a completely different gameplay versus the guy sitting next to me because we just like different things. We want different experience in the virtual world. That just increase time span on the platform and lower the cost. So some of the stocks that we have held in the portfolio for the longest time is just underappreciated by this AI beneficiary thematic.
Can you give us the names and tell us some of the details of some of the other stocks you're holding in Korea that have exposure to these themes?
Right. So in Korea, we own some of the banks, like KB Financial is one of the biggest bank in the region. We also own Samsung Fire Marine is one of the insurance company that has just seen shareholder return being boosted. And into the capex spending cycle of the Samsung Group, we do own Samsung E&A. It is one of the captive sort of construction company for the Samsung Group that could continue to cater to the company's future build out of their clean room in the country. And then for the other theme, about the beneficiary of AI using AI technology, we do like NetEase and Tencent in China. They are the game producers in China, and because of the regulation that you need to really publish games in China, it's not something that AI can actually do for you to really negotiate with the regulator what sort of games can be brought to the market. That still needs the
And it's
leadership
humans.
and humans. Yes, exactly.
Now, much of Asia is now beginning to look relatively expensive. So we've talked about Korea, and I know Japan is in your area, but that's not the pure value play. It used to be India. We'll come on to India in a little bit, but expensive. And something like Vietnam, for example, used to be so cheap, isn't anymore. But China remains pretty inexpensive, still a very unpopular market. Tell me about that from your point of view.
Yeah, I think unfortunately China has just been used as a funding source to buying into the AI hardware space. So that China just have many of the popular holdings among Asia and emerging market investors. When you think about investing in the region, you usually own stocks in China because they are perceived as the best. And now with the funding flow coming out of these popular holdings and going into Korea and Taiwan, it's just have depressed that market valuation.
So people have just been selling their holdings in Chinese markets to buy into the exciting stuff in Korea and Taiwan. Yeah.
Exactly. I think that's definitely play an important role in that. And if we look at the index composition of MSCI China, there are a lot of internet names in there. And many would argue, for internet companies, maybe you need to reinvent yourself to have a new business model to really survive in the new AI era. Maybe you want to increase your capex spending. You need to have the most competitive large language model so as to win, really. As a result, it's not so sure whether those companies are still the leaders in the region. So they get sold off because of fund flow and the question mark of how they're going to evolve themselves in this new technology world.
Yeah, but valuations reflect that. This is one of the few places in the region where you can still say, well,
Yeah, as
I'm
contrary
definitely not
investors,
overpaying.
as a contrary investors, when other people look away, we always want to look more into it because there are a lot of gems in that market, and investors are fixated on a lot of the macro issues about weak economic growth or sort of still underwhelming consumption data. But you know what? There are companies that can actually thrive in this macro environment.
And it is extraordinary, isn't it? What a small part of the EM indices the Chinese market takes up.
Definitely, definitely. I think it's more of the case of how quickly Taiwan and Korea have gone up, and then the market cap of this mega company, the concentration that they have in the Asia index is mind blowing.
Yeah, yeah. Um, and back to concentration and be careful what you buy, right? All right, let's look at India, which was incredibly popular for ages. Everyone loved India, and we were constantly being told you didn't need to worry about price, just buy India because of the growth and exciting companies, etc. And well, that's over. No one's interested in India anymore. Fallen out of favor. But you've recently taken a trip to India.
Yes, so India is very interesting one. 2 years ago, it was one of the most popular country to invest in for the whole region, and here we are. It's completely being put into the bottom of the drawer because it doesn't
No
really have
AI.
any AI stocks in there. All this internet company again, similar like the Chinese ones, being questioned about their survivability for the long term and their growth in the longer term. So I just thought it's an interesting time to definitely take a trip and visit our portfolio companies and identify whether there are more interesting ideas. I think the conclusion is still the market, despite the underperformance versus everywhere else, is still expensive. Unfortunately, is valuation is something that we can't get the hurdle over, but doesn't mean we can't own stocks in the market because there's still selected parts of the market looks extremely valuable for us. And if you look at the growth compounding power of some of the portfolio company is definitely impressive. So one of my favorite in India and during the trip is Shriram. This is a non-bank financial company operating in India for extended period of time. They basically serve to, say, the truck drivers, helping them to give them a loan to get a second-hand truck. They also help the small businesses, giving them some working capital loan and etc. So the business has thrived over the past years because of the underpenetration of the formal banking sector in the rural area of India. They can really serve the underserved. And it can grow in the market because of the income of the average people would go up. They want to take up the formal jobs. They want to open their own small businesses, and Shriram will be there helping them with their vast network across the country and their personal relationship of their loan officer with the end customer, something the formal banking sector just cannot really address to. And what impressed me this time around when I met them, they actually have MUFG, the biggest, one of the biggest Japanese financial company, investing in a huge chunk into Shriram. that means that the credit rating for Shriram can really improve on the back of a big parent company, and at the same time, with the cheap capital support from the MUFG, they can really see their funding costs to go down substantially in the years to come. So we're talking about a business can be supercharged for growth, leveraging to the growth of the Indian economy, at the same time enjoying this expanding margin because of the lower funding costs, and it's still trading at a reasonable valuation as compared to the index, as compared to the peer group. So this is exactly the kind of thing active fund manager like myself try to do. Go into market, okay, it's expensive, but I mean there are no good company to invest in.
Yeah. What about Indian consumer stocks? And one of the conversations that we have on this podcast a lot is about population and demographics. And of course, whenever you look at China and you look at consumption, you look at construction, etc., you have to worry that with a falling population, there's all sorts of things to take into account that you would never have thought of even a decade ago. But while India's fertility rate has fallen, and actually is now below replacement rate, isn't it? But only just, it's still, the population is still growing reasonably fast. And so you would have thought that with a fast-ish growing population, and with, as you were just talking about, high levels of entrepreneurial and entrepreneurialism and income growth, the consumer stocks would do very well.
Yeah, exactly. So the angle that I go in with the consumer stock, also looking at the Chinese consumption trend over the past decades, is really, which other digital companies can cater to
Yes.
that. So I visited a lot of the e-commerce as well as digital internet companies in India, trying catering to this sort of rising middle income class. So one of the company I visited is Meesho, being the one of the leading e-commerce company in India. But again, it's a valuation. I understand the growth. I can appreciate the growth that they have, the vast amount of opportunities that they can cater into, but the valuation is still quite demanding. Then the next layer that I look at, who are the supply chain company or related company catering to that growth. This is a portfolio company that we own for a while as well. It's called Delivery. It's one of the logistics company that deliver the parcels for Meesho. They have about 50% of the market share into Meesho's parcels, and they also cater to the other digital sort of e-commerce company across India. On top of that, they also do food truck load services, catering to the small as well as medium enterprises to help them moving from their products from one place to the other place. And they are one of the biggest logistic operator in the country. If you think about India logistics, it's really amazing the pace of improvement that we have seen over the past year, thanks to Modi, his investment in the logistics space, in the country's infrastructure, really helps companies like Delivery to grow, to improve their services at lower cost, at higher efficiency, so they can take over market share of some of their competitors, as well as really enjoying this growth of consumers wanting more products, they want cheaper products, they want products at their doorstep. So this is something that we have investing for quite a while, and we are really glad to see them seeing acceleration in growth for exactly these topics that we talk about. And at the same time, with that growth compounding the valuation, the leverage, the operational leverage that they are seeing in the business is a beautiful small business that we hold in India.
I suppose the thing that will always come up in conversation when you talk about logistics and infrastructure in India is the energy problem, because they are a net importer of fossil fuels, and that does make for quite a difficult environment at the moment.
Absolutely. This is a topic in every single meeting when I
Mm,
was in India,
I'm
people talk
sure.
about. But I think the government has done a fantastic job. They have shielded a lot of that energy price volatility away from the end customers and consumers. Of course, it's a questionable how long they can do that, but how they managed it, how they manage the inflation, and then how they do coordinated monetary policies and communication with the market definitely brought a lot of reassurance to invest in the market. And I think the other angle to look at is not just about the price of oil for any of this country in Asia or India in particular. It's also about trying to build this energy independence. So that's another topic that, as a team, we just really like to delve into. Um, how Asia can be more independent from global geopolitics or energy crisis for the next decade.
What's the answer to that?
I think, a lot of things have happened, not just about the Iran crisis, but what has happened in Russia, what has happened during COVID time. It's 5 years, a lot of things have happened. And all that taught all the nations around the world is maybe over the past 30 years, all we care about is operational efficiency or getting the cheapest fuel. From this point on, we should look at independence. We should look at having more of this stuff onshore. So we want to invest in companies that really cater to that theme, the services company, the infrastructure construction company, design companies that help resources, infrastructure build out across the region. So some of the stocks that we look at, Samsung E&A, we talk about, that's one of the, they don't just cater to the Samsung captive CapEx, but they also involve a lot of energy resources, build out construction type of work. So that could definitely benefit. Another one we look at is in Australia. It's called Worley. This is a design company, EPC company to really help the global oil and the resources majors to build out new projects. So we do see that in the future, there will be an acceleration in this capital spending cycle in energy as well as resources space across the region.
I suppose when we look at Asia, we always think of it as being entirely an energy importing region, but it isn't. There are quite a few net exporters in Asia, aren't there? Indonesia, for example.
Yeah, absolutely. So Indonesia, Malaysia, as well as Australia, they are really not so dependent on energy importing. They're the net exporters. But then again, when you have the resources doesn't necessarily mean you can have a great hand of cards, but you might not play that very well. So the stock market performance of all the three countries still varies quite a bit.
I didn't know that you invested in Australia, actually.
Yeah, so for my team, we do have Asia Pacific products as well, ex-Japan products as well. So Australia, being sitting in Singapore, is a place that I love to travel to and see companies as well.
Okay, but you put the love to travel to bit first before the seeing companies.
Who doesn't like
bit.
Australia, right? I mean, just think about Sydney, Melbourne, and the wine in Perth. Nothing else you can ask for.
When I worked in Asia, I used to do Sydney, Melbourne quite a lot as well.
Yeah.
Again, technically work, but nice to travel to. So what does the Australian market look like to you? I mean, interestingly, I don't think that we have ever discussed the Australian stock market on this podcast before. So this is a first, Fiona.
Oh, perfect. Definitely my pleasure to touch that. I think Australia is an amazing market. If you rank a kind of capital return, shareholder return, this kind of stuff, corporate governance, Australia definitely ranked the number one out of the countries that I cover. So structurally, it's just a very favorable environment for active stock pickers to work with the company and really enjoying the shareholder return. And then if we look at the resources, which we talked about earlier, Australia being the energy as well as a resources net exporter in the region, it definitely have a critical role to play in the Asia space. So that's definitely the go-to place for us if we do want to own some iron ore producers or if we do want to have more oil and gas in the portfolio. That's a go-to place we would invest. And then if we look at the short term, there are a couple of uncertainty in the market, especially what the government is trying to address the housing market issue over there that brought some uncertainty because household wealth is quite concentrated in housing. But the government has introduced a few sort of anti-negative gearing policies to address what they perceived as affordability for the younger generation. That's a housing problem that they do want to address. That brought some market uncertainty because banks in Australia are hugely leveraged into the housing market in the country. And then as a result of that, the other issue is consumer confidence. As I mentioned, wealth is linked to property price. in Australia because of the expectation that housing price is going to be soft. So the consumer segment is not doing very well. The spending continues, but the expectation is that it's set to soften from this point on. So we can see structurally there are definitely merit of investing in Australia, but it's just temporarily because of the housing crisis the country sees. They want to address it for the longer term benefits of the country's healthy growth that might have set back some of the near term growth potential for Australia.
So for the moment, the most interesting stocks there are probably commodity related.
Yeah, definitely. We think, if the data center going to be built out as planned, they need a lot of copper, where Australia do have quite a couple of names that have exposure in that space. And then the energy security, we invested in Worley, that's in Australia. They don't just cater to Asia to do the resources and energy build out. They do have 50% of the revenue coming from the US. That's a market that just have a huge plan to expand the gas producing capability. So a lot of that just give us a lot of options to invest in Australia.
Oh, Fiona, thank you. That's so interesting. And as I say, at first, we're going to do more Australia, thanks to you, because there's clearly a lot going on. Listen, before I let you go, let me just ask you one question. It's holiday time, right? And all of our guests and our listeners are headed to the beach, and we are wondering, when you head to the beach or wherever you're going,
Actually, I am
what?
already on holiday, but
Oh,
because
are
of the
you?
show, so I fly to here to London to be on the podcast.
Oh
So I
my
was on
goodness, I'm
holiday
so
in.
sorry. Thank you
Oh
so much for
no,
doing
no,
that.
it's
That's
great
so
to be here.
kind.
So I was in Sweden with my family. I brought my 2 kids, and then together with a bigger family. So we rented out a beautiful house by Swedish lake. It's just a tradition that people goes to the lakes
Yeah,
and enjoy the summer, and the kids can swim in the lake. It was
yeah,
absolutely beautiful. Not as
yeah.
hot as here, which is great.
No, but this is so interesting. I am hearing a lot of people saying that they are holidaying but someone told me yesterday they were going to Finland on holiday, and a lot of people are going to Sweden. It's escape the heat, isn't it?
Yeah,
Yeah.
absolutely.
Now you
Highly
have,
recommended.
okay, thank you. Now you have kids, so you probably don't have much time for this, but what are you reading when you're sitting by the lake?
Ah, great question. My younger one is only 1 year old, so I
Okay,
still
you're
have
not
to
reading. You
entertain
are not
her
reading at
all
all.
the time. So one of the books that I'm reading now is The Coming Wave. That's really good, talking about AI, and then, not just about AI, how it's going to change the world, but some of the consequences that you have to think about, like ethics, what it means for job market, and etc. I know I shouldn't be too occupied with work while I'm away on holiday, but it's really the only time, with 2 young kids, the only time I can really spend to do some reading. So that's something that I highly recommend for this AI
Okay, thank
era.
you. And we all hope that when you finish reading that, you'll read a nice holiday romance or something like that to finish things off.
Yeah, thank you. Thank you very much for
Fiona,
having
thank
me
you so much
again.
for joining us. I really enjoyed talking to you, as usual.
Bye. Thank you.